Well, that's another tax year over, but another one is just beginning. And the rampaging cost of living and those frozen allowances and thresholds dragging more people into higher rates of tax will mean that it's even more important to be tax efficient. Your clients will know that and will welcome any help that you can give to help them being tax efficient. Now, especially in relation to income, being tax efficient requires you to take action with your clients at the beginning of the tax year rather than leaving it until the end. There's some exceptions over income over which you have control in relation to the amount of income and the timing of income. In other words, when you own your own business. But when you don't have control over the timing of income and the amount of income that's being generated, i.e. your investments, then it's really important to take necessary action at the beginning of the year to ensure that tax is minimized and you make maximum use of the allowances available to you and exemptions available to you. For example, your personal allowance and that of your partner or spouse. For example, your personal savings allowance, your £2,000 dividends allowance, all available to you and your partner if you're in a relationship. But of course, leaving it until the last minute will be too late if you want to maximize the use of those and make sure that income flows to the right person, because it needs to flow throughout the year to get the maximum income impact. So now is the time to do that planning. And remember, if it requires some shifting of the capital that generates the income, then provided that shifting, that passing of capital is done between individuals who are married or in a civil partnership, there'll be no adverse inheritance tax or CGT, capital gains tax possibilities. On the CGT front, the spouses or civil partners need to be living together as well for that CGT freedom, neutrality to be in place. There's also another factor to take into account here, and in relation to that planning to make sure you make the use of all the allowances and income and making sure that it works throughout the year. And that is in relation to tax efficient investments. And you'll be thinking, no, you can do that at any time. You can use your ISA allowance right up until right at the very end of the year. Classic last minute tax year end planning. And the same for your pensions exemption. Absolutely, of course you can. But for many, that creates some anxiety because it means potentially making a big investment in one hit at one time when you might feel that the investment markets aren't in your favor. It's not a great time to make the investment. For those clients where you know that will be a case and may then impede their planning, why not set up a plan to, and this is a very obvious message, to make the investment throughout the year. Take advantage, if you believe in this, of pound cost averaging to remove the anxiety, which is so important for so many people, of making the investment at the last minute. Just make it throughout the year, set the plan up to be invested in regularly and let it take its course throughout the year. So what I'm saying at this point is, this is a great time to go to your clients and go, okay, we've done our work at the end of the tax year. A new one is beginning. My job is to make sure that you have the most tax efficient 2022-23 that is possible. And that requires us doing the work now. Doing the work now will ensure that you have the best outcome for 2023. Let's not leave it until the last minute.